with energy prices continuing to rise, does this mean that we are going to see continued weakness in the yen?
Yeah, definitely. I mean, dollar-yen weakness has been a focus in markets over the past 2 or so months. And I think looking forward, I would look at the Japanese current account balance instead of the US-Japan interest rate differential in terms of the outlook for the dollar-yen. I mean, a lot of market participants have been focused on the widening differential between Japan and the US in looking at the future path of dollar-yen. I mean, that's totally understandable. US Treasury yields have been on the rise given the FOMC has begun its interest rate tightening cycle in March, and further rate hikes will be forthcoming. On the other hand, the Bank of Japan has been steadfast in its messaging in its ultra easy monetary policy. So, I mean, dollar-yen could rise further given the widening interest rate differential. But then Japan's current account remained in surplus as of April. However, it's been falling over the past year, as you said.
So what is the level that you're looking at? I mean, you're talking about interest rate differentials, add to the fact that we could see the current account deficit in Japan. So are we talking past 135? How far could it go before perhaps officials, that the finance ministry might step in?
Yeah, Bank of Japan's officials have been very focused on the dollar-yen movement recently, as they've coming out every now and then, talking about the rapid weakness in the Japanese yen. But I think, given what oil prices have traded over the past few months, Japan's trade deficit could widen even further, and that's going to put more upward pressure on dollar-yen. Our analysis shows that dollar-yen could possibly trade higher to 136. That's based on our dollar-yen fair value model, and I think that that's really possible if we see Japan's current account moved into a deficit.
We're seeing the 10-year bond yield in Australia rising to the highest since 2014. It was interesting to me that we didn't see the Aussie dollar have much of a reaction, all in all, given the supersized move and expectations of potentially more 50 basis point hikes from the RBA in the next 2 to 3 meetings. Is that sort of a fear of the recessionary conditions that could set in? Where to for the Aussie?
Well, as for the Aussie dollar, obviously the RBA did a 50 basis point hike on Tuesday, and I think the supersized rate hike just blindsided a lot of market participants and analysts, including ourselves. And the higher Aussie bond yields will certainly be supportive of the Aussie dollar in the near term. But then looking at market pricing, the market has priced in a pretty high peak of around 4% for the RBA cash rate. We think it is too aggressive. So beyond the near term, I think markets will just adjust their expectations for RBA and revise lower that peak in the cash rate. I mean, we've already seen some weakening in the Aussie economic data as interest rates rise, and I think we could see some more cooling in the Aussie economic data given more interest rate hikes from the RBA. And I mean, interest rate differential is a less important influence on the Aussie dollar in our view. Global factors such as the Fed and the Chinese economic outlook certainly will play a bigger role in driving the Aussie dollar from here.
Euro bulls will be hoping that 50 is the new 25 when it comes to the ECB as well, right? How much hawkishness will the central bank set up, given that this is really one of the most significant ECB meetings in recent memory?
Yeah, the ECB meeting tonight is definitely a crucial one. I mean, Christine Lagarde has laid out a roadmap for normalizing monetary policy in the past month, and Christine Lagarde actually favors a more gradual policy normalization. So with 25 basis point hikes in July and September, we've seen other ECB members being more hawkish on the size of the rate hike. So some of them are open to the possibility of a bigger 50 basis point hike in July. And I think chances are that the ECB will have a hawkish pivot today at its meeting. And if we do see Christine Lagarde leaning towards a 50 basis point hike in July, I think that's going to be very supportive of the euro dollar.
What about the yuan dollar, given that, of course, we do have those export numbers and more data and more PBOC moves, perhaps more fiscal measures to support the economy as well?
Yeah, as for the dollar CNH, I mean, forecasting dollar CNH is basically forecasting when Chinese lockdowns will ease. I mean, we've already seen some signs of easing lockdown restrictions in China. So I think that's going to be very supportive of the yuan. And of course, we've seen Chinese officials coming out every other day to talk up the Chinese economy and roll out more easing policy measures. One of the main policy lever is infrastructure investment. And of course, not only will it be very supportive of the Chinese yuan if it's push up the Chinese economic momentum, but if the infrastructure spending is going to ramp up, and that's going to be very commodity intensive, and of course that will bode well for our commodity prices and the Aussie dollar.